Halliburton is a company that helps big oil companies and small oil companies extract the oil from the ground, and they operate around the world. They've been around for more than 100 years. And this company I've known of for some time. I've been invested in oil companies for a long time. I looked at the stock on a live stream we had, and this past weekend, a viewer brought up this symbol. And I looked at it on the live stream. It looked good at first glance. I went back and analyzed it closely, and I wanted to share that analysis with you. I wanted to arrive at a decision whether I should buy this stock or stay away from it. At the current time, technology stocks have been really going down. There's been a pretty good correction this week, and it'll be interesting to see how far lower stocks are going to get. It's a good time for me to look for other types of stocks. And Halliburton operates in the energy sector. It's an oil and gas services company. It's in that industry. So it's diversification away from technology, away from communication services, where I probably have the most of my investments. So this would be a pretty good idea from my diversification aspect. Looking at Halliburton, they have a market cap of 29 billion. And that you could either say is a large, small cap or a medium cap company. They have revenue of 23 billion, so it's not that expensive of a company. They have a very low PE of 11. Imagine that. Right now, PEs are really high, and 11.45 PE looks really good. They pay a decent dividend of 2%, not too bad. They have a strong buy rating by analysts, and they say that the stock is discounted by 37%, which looks good. Over the past year, the stock is down 14%. Over the past 5 years, the stock is up 38%. So it's underperformed the S&P and the NASDAQ. Now, investing in energy, the important aspect of making that work is to buy at the right time, buy when it's low. So you could see where you could buy a company like this when it's at a low point. We've had highs, lows, high, low. Right now, it seems like we're at a trough, a low point in the stock price. So that looks good. One thing that I like about the company, if we look at the last 3 years, they've grown their revenue, their top line revenue in 21, 22, and 23. So that looks really good. Their free cash flow looks really good. If you look at their cash flow, and again, we see growth in cash flow, free cash flow in the last 4 years, and really topping out with the trailing 12 months being $2.5 billion of free cash flow. I use free cash flow on one of my principal valuations, and I'll be using that number when I value the company based on free cash flows. So the company is growing. That's good. The balance sheet. Do we have too much debt on the balance sheet? Well, first, they have $1.8 billion cash, but the total debt is $8.7 billion. Not too bad on the debt department. And if we look at the particular statistic of debt to EBITDA, which is one of the factors, I want it to be less than 3. In this case here, it is a debt to EBITDA of 1.86. So that looks good. And 1.86 is a good ratio for the balance sheet. So it's a growing company, good balance sheet. Let's take a look at their forecast. Now, 16 analysts cover this company, and they are all pretty positive about the company. Everybody thinks that the stock is discounted. Every analyst covering it. So that looks interesting. If we look at the earnings per share, it's expected that the earnings per share is going to be $3.42 in 2024. It's going to have good growth in 25 and 26, and probably flatten out or go down a little bit in 27 and 28. So it looks like there's good times coming to this company. I would say that oil prices have been higher than normal, way above $65 a barrel. And I use 65 as a factor because that tends to be where an oil company begins to make money. And we're well above that. So oil companies want to extract oil. They want to hire Halliburton to extract oil and get that oil to market and to make some money. So overall, the earnings per share look good. It's a profitable company generating free cash flow. It's growing its revenues. The balance sheet's in good shape. So I'm liking everything I'm seeing so far. Let's take this data and put it into my valuation model. So what do I think Halliburton is worth? Well, I'm going to value the company by determining what their free cash flows for the future are going to be. I'm going to forecast that. Then I'm going to discount those cash flows to today's value. I'll add cash and take away debt to get to an equity value of the company first. And then I'll look at earnings per share. So as we saw a little earlier in their financials, their free cash flow is $2.5 billion. And that's going to be my starting point. That's what is their trailing 12 months. And I'm going to grow those free cash flows in the first 4 years by 8%. This is my forecast for the next 4 years of free cash flow from Halliburton. After that, I expect cash flows will grow at 4%, and that'll set up terminal value. I'm going to use a higher than typical discount rate of 10% because they are in a cyclical industry where you have periods of boom, periods of really tough business, and it's all dependent on oil prices. Right now, oil prices are decent. but still, I have a higher risk level in this investment. So I'm going to use a higher discount rate. Using that discount rate, the net present value, the intrinsic value of all those cash flows is $44.1 billion. I add the cash on the balance sheet and take away debt, and I get to an equity value of all those cash flows. And based on those cash flows, comparing it to the company's market cap and their current stock price, I get a 28% discount. So that's a pretty good discount on a good company. Looking at their earnings per share, it's expected this year they're going to have earnings per share of $3.42. I'm going to use a PE of 18 because I think this is a good company. They're growing. They have a lot of good attributes. So I'm going to use 18. I'm going to grow those earnings per share by 8%. It gives me a nice hefty stock price of $66.48. But the current stock price is only $32.99. So there's a real big discount if we look at earnings per share. So overall, I'm going to have a blended discount of 52%, which is a really strong discount. I use a higher weight for those free cash flows. That's my principal valuation method. And then I use 1/3 weight of earnings per share, but it's a really strong discount at 52%. So the more I look at Halliburton, the more I like it. I like that it's in an industry that I'm not invested in. I really like the growth in revenues. I think it's a sound company. They have a strong balance sheet. They produce really good free cash flows. And I think that it's a desirable company. If we look at how they rank in the desirability quadrants that I've put together, the ideal companies are in the green. This one is not quite there. I don't think that they have complete competitive barriers against people or other companies entering their space and competing against them. But this company does have a lot of know-how. You just don't roll out of bed and are able to do what Halliburton can do. And they use that know-how, their brand, their credibility, and the relationships to establish a really good business in the gray zones. And buying companies in the gray quadrants requires that you invest at the right time. So I put Halliburton in, I would say, medium desirability, and it is investable for me at the right price. Having said that, looking at all the variables, especially that discount, which is nice and high, I'm going to be buying shares of Halliburton and building a small position for a while, maybe investing an initial $1,000 and then building up a position up to about $5,000, collecting that dividend and hopefully seeing this stock price go up in value and reassessing if I want to invest more money. This is going to be one of the smaller positions in my portfolio, but over time I could see investing more if I continue to like Halliburton. So that's my review of Halliburton. I hope you found it interesting. Just a quick reminder, I'm an individual value investor and I do not provide any financial advice, nor do I recommend that you buy Halliburton, sell it, or do anything with this investment. I'm just sharing my experience, my journey as an individual investor. I hope you found it interesting. I really appreciate you watching and good luck investing in 2024.